Why is momentum so important? I often say this, we got lots of tools now on the internet. We've got a lot of things we can use as private investors that were never around back in the day. They used to draw charts and stuff with pens and pencils and lines. Now we have dynamic charts. You've got so many metrics, plus we've got, websites that show fundamentals. And we should use all our tools at our disposal, to increase the chance. And it's all it's about. It's the chances of getting a positive return, the risk and reward. Is the reward big enough? Is the risk too much to achieve that reward? You've got to be looking at the fundamentals as well as the story. Story is part of it, but it's not married to the fundamentals. You're going to be in trouble. Don't fall in love with the story of a company. Don't ever do that. Stories are important, but so are fundamentals and charts. So the 6 metrics that count when it comes to moving a share price. And it took me some ages to realize this. Be very clinical about it. That's that. And they're not in order of importance. In fact, growth and value are. But it just sounded nicer. I said health, efficiency, momentum, potential. I'd say if you can look at 3, but don't forsake the other 3, because they are important. But if you're going to look at 3 and try and get them lined up, get these 3 lined up. Growth, value, momentum. As long as they aren't a write-off health-wise, the balance sheet isn't, they're not swimming in debt. And in efficiency, it's always good to have larger margins because more drop to the bottom line, of course, and you get a sort of a higher multiple. And it's nice to have, big upside for a broker. But it's not essential to move in the share price. But these 3 sort of are. They really are. And in fact, sometimes value is overlooked. But if you come a cropper, like I said, in fact, with hope high potential stocks, it is pretty much, the potential and the momentum. But anyway, I'm talking about businesses. And by businesses, I mean companies that are selling stuff, turning over and getting towards profitability. Some people think the fundamentals are good. They would take a position regardless. So, and I keep repeating this, and I'll show you an example of where I've gone wrong just recently, and I don't know what got into my head. Well, I do really. But you can buy a good company at a bad price and lose money, and buy a bad company at a good price and make money. The ideal scenario is to buy a good company at a good price. I bought a good company at a bad price, or not very good price. In fact, it wasn't a bad price valuation-wise, but the momentum wasn't there. That was Ramsden's. Now, I just want to show you, okay, why I didn't pay attention to my spreadsheets, which is going to be on the website. It's there for you. If you're not over these yet, please pay attention to them. They do make sense. These are the last set of results here. And look at this. So I've written a paragraph, half a chapter about this in the book, saying 30th of September. 30th of September 2023, and literally upside 60%, potential's there, okay? Enterprise value's got cash, so it's all there, a little bit debt, but they made 10.9 million operating profit. They're only valued at 57 million. Dividend now is 5.71%. Look at all this, pretty much not a red to be seen here, especially on the half year. In fact, maybe that was quite telling. On the half year, it was all green on growth, all right? But pretty much all green here, all right? A couple of ambers. But even value, okay, price to free cash flow is different because they were spending more money there. But the price of sales, PE of 7, EV/EBITDA of 4. Scoring highly. Maximum scores you can get on growth is 30. Okay, maximum you can get here is 25, 18, 25. All the way down, health, perfect, picture of health. Even the margins for a retailer are good. Gross margins, everything. Potential's good. Look at momentum. Look at momentum. And that's why it counts. And I'll show you the chart, okay? So where did I buy? I bought on the release of the results. When was this? Let me just zero in. 15th of January. 15th of January, where was it? There we are. That movement there, right? What did I think it was going to do? I thought higher high, it's going to break that 200-day moving average. And look, don't do that. Don't predict a trend starting. Wait for confirmation of a trend. So you want to break that, maybe see another high above that previous high. That's what you need. As it was, look at that. It's come down from here. And that's the first sign, pretty much, isn't it? It's done it before and bounced back up. It may bounce back up again. But my entry wasn't right here at all. Everything else stacked up apart from momentum. Everything else, I just had to listen to, or watch, look at the spreadsheet I created pretty much. And it was below, where's the 50-day moving average? It was above that, and then it broke back down. That should have been a red flag. On the day they released results, it didn't break to a day, didn't get above that previous high. It got sold into. Red flag. I should have just waited. I want that to even the cross, golden cross, death cross here. I'm buying in a downtrend. What the heck am I doing? After all I've said about buying in a downtrend, I'm buying in a downtrend. Just because I thought it's a great value company. The growth is there, everything. They're healthy. I think it's a contrarian play on the economy. Look where it went. So anyway, my stop loss kicked in. I guess 175, I think, and it's bouncing around there now. So it's very annoying. Very, very annoying that I didn't actually listen to what I'm talking about.